All right, good morning, everybody. My name is Antonio Arikkala. I'm the director for the new markets at Fellow Finance, and I'm here to present you our online marketplace lending platform focused on consumer loans in Finland. The underlying asset for the investors in our online platform is a consumer loan for a Finnish citizen. The loan term varies from 2 to 10 years, and the yield of a note of one loan ranges from 10 to 25% per annum. The loan applicants come in and make a loan application on our website. We do the credit rating and either accept or reject the loan application. If the customer is accepted, we give them a rating from 1 to 5 stars. The loans are installment loans, which for investors naturally give monthly cash flow. And the borrowers are currently Finnish citizens. So then I'm going to go for the features that, in my opinion, makes us the most advanced platform in Northern Europe. We have introduced an effective loan allocator, which is a tool to diversify your investment in multiple loans and also enables you to reinvest the monthly repayments to new loan applications. This, of course, for investors means compound interest. Then we have developed a unique secondary marketplace, which is a tool first to liquidate your portfolio if you need to cash out earlier. And you can also get a quote price to your current portfolio at any given time. The quote price is based on the loan allocators set by other investors to not only invest in new loans, but also for those loans investors want to sell. Then what we find extremely important is full transparency. We offer a detailed view on every single transaction that affects investor returns and cash flow. So an investor can track the whole transaction history of one single loan, for example. And to sum up all the actions, we also offer an explanatory My Account view, which enables the investors to see what's going on in his account real time, of course. I'm gonna have 4 screenshots to show how this all looks like. So this is a view from a loan allocator and where investor has chosen to modify his investment criteria. I want to highlight a few points here. First of all, the investor can set the allocation of the portfolio per risk class, 5 being the best class, 1 being the most riskiest one. After setting how much of his total portfolio he want to invest in certain risk class, he will set his required rate of interest. So if a loan application doesn't yield more or yields less than the required interest rate, the automated investment will not be done. And other way around, of course. Then an important tool for diversification is that an investor can set a maximum amount he wants to set and invest in one single loan. And talking about the secondary market, not only can an investor buy new loans and invest in new loan applications, but also buy loans and invest in loans on the secondary market. The secondary market, an investor can do a single buy, single sell orders, but also, like I mentioned earlier, get a quote price for part of his loan portfolio or a certain type of loans. So the investor selects the loans he want to sell or a part of portfolio and sets the prices he wants to receive per loan divided into loans paid which have different amount of installments repaid. Having said all this, he will get a sales estimation, a quote price, if he wants to instantly sell out his loans. And this is a very nice tool. First of all, you can liquidate your holdings, and second of all, you get an immediate quote price, what your portfolio is valued right now, if you would sell it right now. Full transparency. Every single loan is trackable. Every single transaction, what happens on the account is trackable. So for example, here, a customer has received an interest payment for loan 111188 to his investment account. And you can see here, set multiple search criteria and track every single loan if you want. And this all is summed up on the account view of the investor, which also gives you your return rate and a net value for your total investments. So, 4 key elements of our success is an investor success, of course, because investor success is our success. Easy diversification in multiple loans according to the investor criteria. Efficient secondary market, which enables you to get live quote prices to your portfolio and sell your portfolio at any given time. Full transparency, every single transaction is trackable, and then we have a limited loan loss risk. In case of a loan default, we return 70% to investors. So basically we sell the receivable to a collection agency, and the investor receives 70% of the loan capital. This all has resulted in an investor return on average 13% per annum. Currently our loan book is 27 million euros. It's Finnish consumer loans, and we've been able to acquire in slightly over a year of time over 1,100 investors. Thank you very much. Floor is open for questions. Main parameters for the credit assessment. Of course, we get all the demographic data. Then we verify the income, and also take the household size into account. There are over 40 variables in the scoring mechanism, but of course, the client's ability to pay back is his disposable income.
Is 70% guarantee for all loans, or we can omit 70% guarantee to enhance upside?
Once again?
So you mentioned in the case of loss,
Yep.
At least 70% will be guaranteed by Fellow Finance, and I thought if we could omit that guarantee to enhance upside, obviously you will take some insurance fee for that guarantee.
No, there's not. I mean, 70% of the loan capital is returned to the investor.
Sure.
What's your default history, default experience?
Yes, there is default history in our service. You can see it on the statistics page. And it's all visible, it's real time. So if you go to our service, fellowfinance.fi, take statistics, you can have the default rate by every single credit rate. In the best rating, it's around 4%.